Well, good morning, traders. This is Blake Morrow with the Face Show, and that's what you're listening to right now. And I got Ryan and K-Man that are joining in. And I want to say good morning to Michael, John H., good morning, Domesso, good morning. Did I get that correct? Good morning, Kay, AJ, Ryan, Bran, Ingmar. Good to see you guys and gals. And that's just to name a few. Wow. Well, we're getting a little bit of, it's actually been another one of those quiet, like European mornings. We had, some data come out in Europe. We've seen a pretty good move in the yen. I'm going to bring in K-Man here in a minute just to talk about that. We got to get ready for the ADP data. The ADP data today is going to serve as a little bit more importance since we do not have non-farm payroll on Friday. Obviously, the government has reopened, but I'm assuming that they're just going to push back NFP. How they can't get it all together between now and Friday, I don't know. Really, like a couple of days, is it going to make that big of a difference? Compiling the data, since I'm not in the Bureau of Labor and Statistics and I'm not a government worker, I have no idea how that all actually works. But regardless, looks like the ADP is going to be the highlight today. And then we have ISM too, because ISM manufacturing data came in much better than expected on Monday. And so the services data, which is arguably way more important, is going to be very much in the crosshairs today as far as economic data goes. As you guys can see, we have made a nice recovery in gold. Gold came within just a couple of dollars of 5,100. Whether we break 5,100 or not might have more to do with the data that we get today and perhaps yields. I mean, if you guys recall, yields really spiked up, following the ISM data earlier this week, and you can see that they've kind of been, just kind of holding up. Here's your 1 hour chart. This is, ever since the ISM data came out a couple of days ago, it's just kind of kept a nice little bid in yields and on the 10-year, and you can see the 30-year, same thing, nice, move up. A continuation higher would be expected on strong data that we get today. Whether we get that strong data or not is going to be really interesting. And the reason why I say that is I was in the Forex Analytix chat room just a little while ago harassing Michael Brown. He put it, I think I mentioned to it maybe to you guys yesterday about maybe I don't know where the hell I put it. Right here. Maybe the U.S. dollar weakness is ADP jitter since Michael Brown is so bearish on the labor market. That must be it. It's rare, and I harass him a lot. But we're going to have him here on the Face Show on Monday, just so you guys know. On Monday next week, on the 9th, Michael Brown from Pepperstone, he's going to be joining us. Yeah. He's obviously a very big bear on the labor market. Ryan, can you confirm that?
I can confirm that harassing Mr. Brown should be a national sport.
Yeah, it is. It is and will be. So you, matter of fact, on Monday are more than welcome, and both you and K-Man more than welcome to stick around for that interview. So we can the three of us can beat up on him all at once. How about it? How about that?
Oh, I will be. I'll be there.
All right.
Bells on.
Oh yeah. It'll be a good one. So make sure you guys are around. And speaking of which, today we have an interview from Tahir from Deer Point Macro. Tahir, I've done a few interviews with him. He's a really sharp guy. He used to live in Canada. He's now he's a U.S. Citizen, but he moved to Canada because he was working for a Canadian, like TD Ameritrade or something. I can't remember exactly who he was working for at the time. He had to be like incognito, so we couldn't even use his name on our interviews. But then he shifted, and I think he moved back to. He's back in the States, but I'm trying to think where in the hell he's at. He's working for a fund now, and he does a lot of macro currency analysis, macro analysis for this firm. So we can use his name again, which is great. Or now we can use his name. So he's going to be here Really sharp man. Great, analyst and fund manager. So make sure you stick around for that afterwards. And then tomorrow we have Jamie McGeever from Reuters. He had to reschedule because he had a personal issue come up like right at the very like literally as he was coming on to our show last week. So he'll be on tomorrow. So make sure you guys are all around for those interviews. All right, let's get to the markets, and let's start with the yen. Let me bring in K-Man. K-Man, good morning. We have this Japanese election, snap election. And is there a risk to the yen? But also, is there any risk for Takeichi? I mean, I know she's a headbanger like Ryan. She loves rock and roll, and she loves like, well, I don't know, Quiet Riot, Iron Maiden, whatever the hell she likes. What is it, Ryan? You would know.
Iron Maiden. She loves a bit of Iron
Oh,
Maiden.
of course, she's an Iron Maiden fan. But you got this. You got Takeichi. The snap election coming up. What are the risks for the yen? What are the risks for the election that we've got coming out this weekend, K-Man? And good morning.
Hello, everybody. She's also a huge fan of Mrs. Thatcher, the old prime minister that we had here in the UK back in the what is it, 80s, 90s?
Yeah, Margaret Thatcher. Yeah.
She wants to be the new Mrs. Thatcher. So the thing for the yen is that we are definitely trading actually the potential landslide victory of the LDP now that Takaichi is leading. She's got a lot of support, especially the 20 to 50s year old. The support is really high. And obviously the market is thinking about the fiscal looseness that she has been talking about several times, even in her last interview when she supposedly said that for her the yen, the weak yen had benefits, but that was a complete misunderstanding. She said that this is no time for fiscal tightness, or for fiscal restraint. So really, the market is trading that. So that is really what is going on now, going into the election. So there's one risk that there is a huge surprise that the newly formed opposition party would get more votes. But personally, I think Takaichi will get it, no problem. And that is what the market is now trading. Added to that, we had an overnight article by one of the ex-BOJers saying that the Bank of Japan does not think that the JGB situation is perilous enough yet, that they are not ready to start to buy and schedule JGBs. That added a bit of fuel to the fire, and here we are. Now there's two things. We could see more verbal intervention before the weekend, which if it continues to push, I guess the MOF won't like it. Katayama will probably be out commenting. And in case, or in the event that Takaichi indeed would get a landslide victory, the market is probably going to try to push the yen even further. So we've been talking about that already over a few shows, but I really think the intervention threat is going to be very high once we come out of the weekend. And if she indeed manages to get that big victory and get the majority back in the houses.
When you talk about yen intervention or yen intervention, we like to call it. You look at some of these currencies, like here's the sterling yen. We're right back up to highs. Aussie yen, and posted these charts in the Forex Analytix chat room just so you guys can see them and take a real big look. But look at the Aussie yen. This is since the COVID lockdown lows. We're at the underside of that big broken channel. I mean, we're at new all-time highs. I don't know if those are all-time highs or not.
Yeah, I think so.
But yeah, I mean, it's
all time. It depends where do you go back to. It's not really
right.
all-time highs.
From 1874, it's an all-time high. But prior to that, no, I'm just kidding. But you got the Kiwi yen up against really, really critical resistance. Just a lot of currencies are just so strong against the yen. That just tells you how weak the yen is overall. So
And
you know, that intervention risk might be more prominent after this weekend, and that's the
yeah, because
takeaway from
that's
this
exactly the
conversation.
problem. If you would have like a strong dollar yen going up, there would be very little to do really to stop it. But then your yen index, or the yen index as we call it, would not be as low. But it's a case that the yen is weakening versus everything because of the market trading, the fiscal largesses of the incoming government. By the way, this is not new. All the prior governments have done virtually the same since Abe came on, right? But current situation is different compared to the one that Abe was in, because we have a different Bank of Japan, which is raising rates, albeit at a snail's pace, compared to Kuroda, who was throwing the kitchen sink, everything at the market to try and get inflation back up. This time it's a different scenario, but yet the fiscal situation and the fiscal policy is still weighing very much on all things, on the yen versus everything.
Got it. And you know, and K-Man's right. It's a big difference between today. Actually, Japan has inflation where they didn't back then. Hey, real quick, we have ADP coming up shortly. I do want to just reference the S&P. We continue to be in this ascending channel. We're up against really massive resistance on a weekly basis, but you know, we continue to hold above the 50 DMA. I mean, the dips below the 50 DMA just continue to be bought. I'm sure it's very frustrating for anybody who's bearish, but don't think that that's a one-way street. It's also very annoying for anybody who's bullish, at these levels too. So very tight ranges we're seeing in the S&P. Maybe the labor data can today could maybe dislodge us, but I do also I have to mention, I mean, the move that we've seen in Bitcoin has been epic. We broke below 74,000, which was, by the way, big resistance right here. We're probing it. The bear flag pattern still points lower. We are oversold on relative strength, slightly divergent. So, this is such a big level that we're probably going to need a bunch of tests before we can actually break. It's just been like a wall of support. So that's just something to keep in mind. All right, what I'm going to do is I'm going to pull over my charts here with ADP up and coming. We have the S&P to the left. We have the dollar index right in the middle. Yields, 10-year yields, going to be right here to the right-hand side. I'm going to go over to Forex Analytics and pull up the data flash. Oh, it's already up. I'm going to pull that up, pull it over, and bring this over here. And Ryan, before the data comes out, we got about a minute. How important are the ADP data in your view? I know we're without NFP, it should be fairly important, but what do you think?
Yeah, exactly that. It is going to be important. Now we haven't got NFP, so this is all the market's going to get until we do get that NFP. Again, usual theme, you got to look at the variation. We're still in sort of double-digit jobs growth. If it's around 30 to 50,000, 60,000, great. If we see a big negative print, then the market's going to have a paddy. Same if we see a big positive print, say above 100,000, then the market's going to be, when are the Fed going to cut again? Because the data and inflation is suggesting that they don't need to.
Yeah, and ADP is known now. I know we haven't seen big variations in jobs data in a while. Due to a lot of different forces. But if there is going to be some outsized beat or miss, it could be in this ADP number. I just want to remind everybody. We are about 10 seconds away from the data. So stand by, get ready to hit the bid. I'm just kidding. I'm just joking. Here it comes.
22.
Weak. All right. Well,
so a bit weak.
Yeah, a little weaker. No revisions that I can see yet. Dollar's softening a little on the news. Yields aren't really moving yet. I mean, they've come off just a bit, I guess. S&P unchanged, really. So not a big reaction. K-Man, you have any thoughts here?
No, no. That's within the. I think that's within the error margin or the variation margin. The next one is the prior one, sorry, has been revised just to
producing
4K
Slightly.
lower.
Yeah.
Yeah, maybe just stopping the dollar from catching more of a beat, but we'll see. To me, the ISM is more important. The one that comes out in about an hour and 3/4 of yeah.
Right, exactly. I agree with that sentiment as well. All right, so let's get back to kind of like the macro point of this conversation today. Let's talk a little bit about that European economic data that came out, because I saw, and Brian, this is where I'm going to need your expertise here. I saw the CPI come out. Some of the inflation metrics from Europe, they came in below 2% from what I was seeing earlier today. So what's the takeaway from the European data that we got today? Oh, I guess it is 2%, around 2%.
Yeah,
Sorry.
well, the headline CPI came in at 1.7 as expected, which is
There it
down from
is.
2%, but that was revised up from 1.9, so it was below 2% last month. Anyway, the core is probably more important. That came down a pip to 2.2 because the ECB have done their usual accounting trick where CPI isn't important now, but the core is important now. So if we see that number drifting lower, under 2%, that is going to put some dovish pressure on the ECB. But then that flies counter to what we've been seeing in the PMIs, which is constant increased price pressures, unless you're in France and then things suck. But even their services number for prices showed that input and output prices were rising strongly. So under the surface, we're seeing price pressures. It's just not showing up in the main data yet.
Got it. And looking at the data here on the calendar on Forex Analytics, this is all red, so that's bullish, right?
Yeah, you could say that. The funniest one is Germany, because in December their PMI was 52.7. The flash number came in much higher at 53.3, and then the final number went lower than last month, 52.4. So they're all over the shop. But all the rest, they're all in expansion except for poor old France, who are lagging behind as normal.
You know what? Oh, here's the French data. Okay, I'm sorry, I didn't have that up on the screen there. Yeah, so a little bit of a mixed bag. The euro is really holding, for the bulls where it should right now. You can see we're capped by like channel resistance. This is the first thing I did when I woke up this morning and I jumped in our chat room. The first thing that I was looking at is I was like, oh, look, surprise, surprise. We were capped at here. This is here. There we go. I was like, oh, look, surprise, surprise. We're just held up by resistance. I mean, the good news is by the looks of the euro, if you just stare at this chart, exactly where it turns bullish. It turns bullish above today's highs. So that's why that ISM data is probably going to matter a lot today, because if, for those of you that are trading dollars, as long as the data is not a disappointment, we're probably not going to break 1850. We break 11850 in the euro, you're probably going to see a little bit of a squeeze. And so that's probably how important that ISM data is a little bit later today. And like I said, I think that's the chart that we should all be looking at. With also, like we mentioned here yesterday, the support really being this confluence of a 50% retracement of this move and the bigger move, which is all the way back to the bottom end of the channel to here. It's a confluence of support right around the 115.70 level. So as long as that's holding, it's hard to get too bearish, but at the same time, you don't want to be bullish or bearish the dollar unless we start really breaking above 1850. What you get here on the F.A.C.E show is hopefully some actionable ideas, so you guys can walk away from today's show and go, hey, I know exactly where I would need to be on the long side and know exactly where I need to be on the short side of whatever market that we are looking at and analyzing with you and for you. So with that being said, let me go over to Ryan or K-Man. K-Man, you've had a lot of focus on the Aussie Kiwi, and you've been highlighting it a lot in our chat rooms. You've been long the Aussie Kiwi. It looks really bullish. Yesterday we had New Zealand data, that
Yeah.
employment data that came in worse than expected, which just boosted your Aussie Kiwi back up towards these range highs. I know you're looking at this one, but is there anything else that you might be looking at as well? Because this is a big range extension too, by the way. If you guys look on a weekly
Yeah,
basis.
I mean, just clearly, it's the one that I'm looking at there. It's okay. There's the technicals is one thing, but then you have like a clear interest rate differential between the Aussie, Australia, and New Zealand. The market was getting a little bit more hawkish, not looking for a rate hike on the RBNZ towards the end of the month, but or later in the month, I should say. But that hawkishness may have been scaled back a little bit because of that employment report yesterday. At the same time, we had a pretty decent Australian PMIs coming out. So I think that that is one of the reasons why I think that Aussie, and actually Aussie in general, could continue to do a bit better. I'm small short Euro Aussie as well. But what else am I looking at? I'm still a bit short dollar mix, just because it's heavy, and emerging markets are not suffering in whatever goes on right now. They've had this blip when well, the last day of the month really of January, where everything got thrown out of the window for a few hours. But that's now passed, and the mix is doing a bit better. I still think that until we know exactly what's happening with the USMCA renegotiations, that mix could do a bit better than Canadian dollar, for instance. And not only because of interest rate differentials, but also because there seems to be, apart from the migrants and a bit of drug stuff, there seems to be less tension between Mexico and the US, where the Mexicans also want to stay on the right side of the Trump administration, and the Canadians who are rather looking a little bit against, or at least looking besides. So I think that's one of the reasons why I still like the mix a little bit. What else? Well, we were talking about on our shows, multiple shows now about this 44, 5100 in gold, and that is something that I'm looking at relatively closely as well. Because of my morning updates as well in the room, I said this really, I think the 4400, 5100 is really the range, outside of which decisions will have to be made. And I clarify, I think if it goes back above 5100, which has been a level that has been traded multiple times on the way up, on the way down, the first leg lower, it stopped there, bounced, and then when we crashed through it, we had this fierce acceleration, but we also stopped on a very good support at 4400. So those two levels are really, to me, where we should pay attention. I'm not calling one or the other side right now, and I actually think that we could potentially range trade a bit. But those are really, those two levels are really standing out to me on gold.
Yeah, I mean that's and by the way, I do want to say great job on those of you that said 50. We're going to see 5100 before 4400 in gold. You guys nailed it within about 8 points of that. And just for the record, I mean, when you have your first bout of volatility that we saw, you can see how we hit 5100 twice. And that was also, if you guys don't see it, it was also the breakout point here, which, set us off on that final leg higher in gold. So that was naturally a big level of resistance. If we can clear it, that's going to be, I would think, pretty damn bullish for gold, because there are a lot of people that have written off gold and said, they do not believe that gold's going higher from here. After what we've seen for the last couple of weeks. So, break back above 5100 would definitely, have them scratching their heads, would be my assumption. Speaking of which, of scratching my head, I got to go back and take a look at Bitcoin, because we are right at the session lows. And you can see, just this European session low right here. Oops, let's go to an hourly chart. You can see we're probing it right now. It doesn't look good, and I have to. I was talking about this yesterday on the daily roundup, and that's a private show for the Forex Analytics traders. One of the conversations that we were having is just about like what is it that we're not looking at, and how can this really affect people just in general. You look at meme coins like Doge is one that sticks out in my mind because everybody knows it. If you look at where it's at versus where it's been, and think about like when the Trump administration came in, and where we were trading, and how bullish the world was on crypto. We were trading at 25 cents. We've lost more than 65% of its value since then, and that's just that these are the meme coins that anybody can buy. The Fart coin, which is still really in my mind the most ridiculous thing you could even ever think about buying. And I'm sorry if some of you own it, but it's Fart coin. And I want you to go into the mirror and say Fart coin and try to make a straight face when you say it. I dare you. You can see we've gone from, let's call it $1 to 20 cents, in early 2025. I mean, that's, you're losing 80% of its value since then. What happens when these meme coins disappear? And I asked that question not to freak anybody out, but the fact is the crypto market is very similar to the dot-com bubble. I can't tell you how many companies have gone out of business, back in the early 2000s that were dot-com related. You can draw a parallel between AI and the dot-com bubble, but I could draw probably a better parallel between crypto. And when you have all these meme coins, what do they do? I mean, that's a question I ask: is what do they do? You got Fart coin, you got Bert. What the fuck is Bert's? Excuse my language. What the hell is this that everybody got sucked into? What is that? What do they do? And that's the thing when you have, crypto really coming under pressure and some of these bigger names. What happens to the meme coin market? And that means that just your everyday person, maybe that person that's in the lower K of the K-shaped economy, that took all of their savings or all of their tax refund that they got and put it into some meme coin, over the last couple of years, has disappeared. And so this wealth destruction that you see here, I think, is something that doesn't get enough coverage, and it's something that is a bit of a risk. Ryan, you unmuted yourself, so you do want to say something. Go ahead.
Yeah, did you know there was a Blake coin?
No, I had no idea.
Yeah. So
I did it. I made a lot of money on that Blake coin.
You
There is a Blake
game?
coin. What the hell is that? I had no idea. But yeah, you just look around it. I mean, and I keep some of the bigger names, like Litecoin on my screen. But look at the destruction, the wealth destruction here. Here's XRP. I mean, everybody's, obviously they think this is like the next Ethereum, and I mean, it's breaking down from last year's levels. There's Stellar, there's Solana. I mean, they just look really dangerous. I don't know, man. And it's something that, if Bitcoin continues to blast lower, where I think it's going is in the, mid 50,000 level, and Ethereum, drops back below 1,000. Well, what happens to all these meme coins, I guess, is my question. So it's just something that you guys have to keep in mind. And by the way, we work with a lot of brokers that are very crypto heavy, and I hear the stories. I know the stories. I know a lot of the client stories too, which is scary. I hear a lot of it, and it's not just in the United States. This is a global phenomenon, guys. It really is. So, anyway, I don't want to get too hung up on that. I'm going to bring into here. Let me go find him. But in the meantime, while I'm doing this, Ryan, give us a little idea of what you're looking at today. Generally speaking.
I'm keeping an eye on the stock market moves because I thought it looked a bit bullish yesterday, and that's one of the merits of looking at break trading rather than bias trading because you can wait for the move to happen rather than try and anticipate it. But like you said yesterday, the dips were bought up well enough down to what it was 68, 60s, 70s. So it's still in the hunt for those highs, I think.
All right, all right. And K-Man, I know you gave us a list, a laundry list of things you're looking at, but one thing in particular you're keeping your eye on?
And as I said, I mean the Aussie Kiwi, the Aussie in particular could be doing well versus quite a few things. And then I'm surprised Ryan didn't bring up Euro Sterling because that's sort of pretty decent zone.
Sure is.
Ryan,
I'm here. Yeah,
yeah,
going into this
I'm
86 figure.
surprised you didn't bring it up.
Yeah, oh, well, yeah, and he wanted one.
Yeah, I asked for one. He gave us one, so now he's given us two, thanks to K-Man. So,
Yeah.
all right, guys. Well,
One and a
thank you
half.
so much. I really appreciate it. And just so you guys know, I'm gonna give you guys something to look at myself. I think you got to keep an eye on the dollar index lag pattern. And I know we just had some weak data push the dollar down just a little bit, but the dollar bullishness has not worn off yet. So you got to keep an eye on the dollar because if the dollar does break higher, we start breaking below or breaking above 97.80. We're going to see a further squeeze in the dollar. I haven't given up on being a dollar bear, but you can't ignore what price action is telling you. Right now, the dollar is pretty firm right now going into today. So ISM is going to really matter. All right, guys. Hey, I want to thank Ryan and K-Man specifically for being here. And you guys listened to your flow show today. You guys should always listen to the flow show in the morning. Remember, it's during European hours, and if you can't catch it live like me, I just listen to the replay literally on Twitter. I just go on to X and just find the live stream and just start it from the beginning. And I start listening to those guys when I'm going through all my charts in the morning, posting them in the Forex Analytics chat room. So I highly recommend you do that because it helps you get up to speed on what's happening overnight. Because I can read through like Live Squawk and I can go, okay, I went to bed right here last night, right here. This is when I went to bed, and I can catch up on all the headlines. But hearing what these guys are seeing and the price action that has happened is so valuable to all of you as traders. So make sure you do that. So Ryan, K-Man, thank you so much.
Toodles.
Thank you very much.
Toodles. Toodles noodles. I like it. All right. Well, you know what I like is I like to hear from Deer Point Macro. Tahir is here to join our show. Good morning, Tahir. How are you?
Good morning, Blake. How are you doing?
I'm doing great, man. It's been a long time, and I was just telling everybody earlier when I first interviewed you, a couple years back, I couldn't use your name, and you had to be incognito. But that's not the case anymore.
Not the case anymore. No, it is
Uh,
not. So, I've started to kind of just open up a little bit now that I've had kind of less compliant constraints, and the firm I work for is much more allowing of these things. So, it's great to kind of be able to get out and speak with the veil of anonymity lifted. So,
Yes, it's awesome. It's awesome. If you guys don't follow Tahir, this is his profile on X. Very, very great wealth of knowledge. He knows the currency market very well. A lot of emerging markets. We're going to talk a little bit about emerging markets today. But before we do that, Tahir, I want to get your general ideas or thoughts about where we stand in the markets right now. Full stop. Meaning, here we are in equities. Here we are with economic policy. Here we are with the dollar and precious metals. How do you feel about the market and the economy as a whole before we dig into some of the EM issues?
yeah, no, that's a fantastic question. The economy as a whole, I'm still pretty optimistic on. I think at least from an output side, we've continued to kind of surprise to the upside. And so it's kind of difficult to see as it stands now any sort of slowing. You have had some pickup in investments in certain sectors, like industrial investment is up. Obviously, research and development and IT is up massively. And so I believe personally, and actually, funny enough, that's kind of what that first post that you're hovering above is actually explaining. I actually believe the United States has shifted to a higher level of output going forward. Um, and so I think that that's overall a good thing. As it pertains to the markets, I think as we saw today with the ADP data, which came in well below expectations by I think almost 20,000. Um, Markets are going to overreact to these kind of data points because I really think the push and pull as it relates to the dollar, as it relates to the fixed income markets, and as it relates to equities is the economy weakening or not? And whenever we get kind of these, surprise to the downside data points, I do think that that's probably going to cause a sell-off. Could I share my screen by any chance?
Absolutely. Yeah.
Okay.
Yeah. More. Yep. Let me go ahead and there you go. And I'm going to pass it over to you. And by the way, you're pretty upbeat on the U.S. economy to hear, and I'll let you know when we can see your screen.
Okay.
How do you feel about the labor market uh, as a whole? I mean, and that's not because of today's data per se.
Okay. As a whole, I'm actually pretty optimistic. I do think that labor is kind of, normalizing. And so, Jerome Powell essentially talked about this in the presser where, the supply of labor and the demand of labor are kind of starting to come into equilibrium with where the economy is. And so I just feel like we're probably going to bounce somewhere between the 4.4 and maybe slightly below 5. But I think overall the labor market is starting to normalize here. I mean, as it stands now. So with the labor market, I'm pretty optimistic. So, and I mean, you can see this in this showing here.
Yeah.
Okay.
Yes, I
So
can see it.
so this is Citi's economic surprise index. And so obviously there's been massive surprises to the upside and hard economic data relative to where forecasts are. So
Well, that's
overall, I mean,
that's bearish for the economy, right?
no, no, that's good. That
I'm
means
I'm being
we're
sarcastic. I'm being
yeah, yeah,
sarcastic, buddy.
sorry. Coming in over expectations. So, I think overall this is very good, but if we kind of come back to this chart here, and I'll expand this. This is rates kind of across the curve and you got your treasury spreads here, you got interest rate swaps and everything.
Yeah.
But overall, I mean, we can see now actually the 2s curve is steepening, right? So it's up 110 basis points now. So
And so what's that tell you to hear?
for me, it tells me that the people are still relatively optimistic about the economy as it stands now. And even if we look at the actual change in yields up here, yields are actually moving higher
Because
as
if it was flattening, that means yields in the 30-year would be going up more than the short term, which means that people are more pessimistic on the economy, correct?
pessimistic about the economy. Correct.
There you
So
go.
overall, I think that this is very good, but I do think just given all the uncertainty that we have, kind of like yesterday, you're going to have these days where people sell the US. The curve in the morning actually steepened slightly and then kind of flattened throughout the end of the day. But so you had some selling of rates. You also had selling of the dollar yesterday. Equity markets were down. And so I do think that there's going to be kind of this continuous uncertainty. Yesterday we had the government shutdown that came to an end. And then we also had this potential that Warsh, if Tillis doesn't essentially capitulate, Warsh would not be sworn in by May, and it could potentially be Philip Jefferson, who's the vice president
Yeah,
currently.
wait. Really quick. I'm glad you brought this up. So this is actually a really important topic. I want to get your feelers, or I want to get a better understanding of how the mechanics work here and what's the market impact. Let's say that Kevin Warsh just, I mean, he just gets the denial and Powell's term is up.
Yeah, let me try to reopen that. That's weird. Like if we actually go here, and this is just like kind of a decent graph, when it decides, there we go. I don't know why I was saying that it wasn't available, but sometimes these tools are
It's
kind of finicky.
technology.
Yeah,
Sometimes we just
so
don't have answers, right?
so if we look here, we can kind of see a breakdown. So Philip Jefferson, this is kind of a breakdown of how dovish. So more to the left is more dovish, more to the right is more hawkish. But if we look at Philip Jefferson, I mean, he's much more of a centrist. So, you could potentially get easier policy relative to what you would with Warsh. Um, but it's kind of a toss bag because he's kind of in the middle. He's not really a hawk. He's not really a dove. And so I think that it would kind of just more depend on where data comes in. But right now, if we look at a much higher view, this is interest rate probabilities going out to 2027. I mean, you don't actually even have really yet two full cuts priced in. We're all the way out to essentially 2027. You have 44 basis points of cumulative cuts, and that's actually been walked back. I feel like markets are still trying to digest what they think would happen with Jefferson, but there is the potential that he would be much more dovish potentially than what you could maybe get with Warsh.
Which is interesting, and maybe Trump's trying to do that. I don't know, but let's game this out just a little bit to hear. And I didn't even expect to have this conversation with you. Is it? I mean, could that? To me, it seems like that's a realistic scenario. You got on one hand, you got the Fed chair currently, Powell, who's obviously in the crosshairs of the administration, who, they have this like Vulcan death grip on Powell and they don't want to let go. Yet you have senators, like I guess Tillis this morning, who's like, well, we're not going to vote. We're not going to vote in Warsh, your nominee. I mean,
Mhm.
could there literally be a standoff until the end of Powell's, tenure?
Well, I do think so. And yesterday, LSEG, which is the platform I'm using, which used to be Refinitiv, and then Thomson Reuters, and so on and so forth. But they put out a piece essentially on that, and Trump was saying the potential is if Tillis doesn't capitulate, I think he's up in January of 27, if I recall the article correctly. Philip would just Jefferson essentially would just be the Fed chair until Tillis is kind of steps down, and I think he's on the verge of retiring.
Yeah.
So, yeah, I mean, we almost have potential for 6 or 7 months of having Philip Jefferson in as Fed chair, and if he does prove to potentially be much more dovish than even Warsh, I mean, there is that potential that he might just stay on permanently, which is what we saw with Myron as well, right? Myron stepped down from the Board of Economic Advisors, and is now, I believe, kind of at the Fed full time. So.
And you know what? If I was Myron, I would just say, you know what? Screw you guys. I'm gonna go find somebody to pay me, 2 million a year, and I'm gonna be advised for them on in the private sector. That's what I would do. I don't want to deal with this administration or politicians or Federal Reserve anymore. I'm just gonna go private sector. That's what I would do if I was Stephen Moran. Anyway, I digress. This is a real fascinating conversation to hear. I love having you here. So this won't be a one and only time on the Face Show, even though this is your first time on the Face Show. I definitely want to have you back. One of the conversations that we were having on the side before you coming here, before today, was about your views on emerging market currencies. And I'd love to hear them because we've seen the strengthening of the Mexican peso and the rand quite substantially. Can that continue in today's environment?
That's a good question, and that's something that I'm essentially I've been thinking about a lot, and I think that it's kind of going to come down to emerging market to emerging market. Um, and so for the peso, I still think that there's potential. Actually still think that there's potential for the real as well. And so what we've actually kind of started to see is for a lot of these emerging markets, their overall export terms of trade have improved drastically, and that tends to actually allow for strengthening of these emerging market currencies. But also, if we start to look at a lot of the emerging markets, they've kind of hit their inflation achievement more or less. And if you kind of look at emerging markets and broad, they're much more, they're actually moving closer to kind of a tightening cycle than they are now a net easing cycle, which I also think is going to be beneficial for a lot of these currencies because if you looked at the real for a while, the real was doing extremely well because there was a huge carry there because I think rates were almost at like 15%. Um, and so I do think that overall there is kind of this potential for a lot of these emerging markets, especially in Latin America, to continue to do extremely well, especially on the backdrop of where industrial metals have been as of late. And I know that we've kind of gotten a sell-off, but overall, I just think the global economy has kind of started to improve. And so there's
Yeah.
going to continue to be a lot of demand for those industrial metals, mainly from places like China.
And we've seen like I mean, obviously the dollar max since Trump's second term. I mean, the dollar max has gone from what to basically 20. Let me just confirm that before I start talking out my butt, because yeah, I mean it was 20. Above 20, actually closer to 21 right after he was elected. And we've gone from, I mean, that's a huge move. I mean, the peso, let's just, for argument's sake, let's just say we've moved about 17% appreciation since Trump's been in office, a little bit over a year. So after that much appreciation in the Mexican peso, should we really be buying Mexican pesos at these levels, or should we wait for a little bit of a pullback? Because you know as well as I do. I mean, the one thing that shakes the emerging markets to the core is seeing a little bit of a pullback in equities. If we see a pullback in equities, we're going to see some of those, they'll give back some of their gains. So, how do you feel about where we currently sit?
Yeah, for now, I mean, I probably wouldn't be entering in the peso. I think that there's other markets that kind of look much more attractive, at least in the EM space, one being the Hungarian forint. Yeah,
Foreign.
so I think that this actually has much more potential, but not being not being long the Hungarian forint, but being actually long dollar here. I actually believe that this is going to end up being a very good trade. The Hungary's fiscal budget has absolutely exploded, and so I do think that there's kind of some risk there that's currently not being priced in because the forint has strengthened against the dollar. But I think that this might be a more attractive place to start to be, potentially long dollar here more so than I would in the peso because there could always be that retracement now, and obviously the peso's had a pretty good rally, so I wouldn't be legging in here yet.
Okay, and you brought up the dollar. Let's talk about the dollar as a whole.
Mhm.
How do you feel about the dollar as a whole? Because we have this whole, no, it's not happening right now, and we can talk about it. But the whole sell America trade has really been more of the sell the U.S. dollar trade at this point.
Yeah.
How do you feel about the dollar where we currently sit? I mean, do you feel that the euro is going to scale 120? This administration is trying to push the dollar down. It's going to continue to be weak. Or is this just a buying opportunity and it's time to get long the dollar because the euro is going to trade back to 110? Where do you stand on the dollar?
Yeah, for me, I mean, is there the potential for the euro to hit 120? I do think so, but I feel like going into 2026, again, the real question kind of comes back to the economy. Is growth going to slow dramatically from where we were in 2025? And is the labor market going to deteriorate, right? If those things come true, I would definitely not want to be long dollar. I do then think that the euro would continue to strengthen, the pound would continue to strengthen, and the dollar would just overall weaken. But that's not my camp currently. So I do think that the dollar could potentially get a short term kind of more of a tactical rally than actually just wanting to be long dollars throughout the end of the year. So I think that the dollar it's not probably going to be a great answer, but it's going to kind of be more tactical longs and tactical shorts. I think that it's going to have days where it rallies and then days where it sells off. And I think that most of that's just going to come down to foreign sentiment as well as kind of how is our economic data coming in, right? And so
Yeah. Yeah.
I, I
So
feel
you're
like it's
so
more of
you're
a
like the Fed.
tactical.
You're data dependent.
Yeah, data dependent, unfortunately, and I feel like it's just the dollar here is more of a tactical trade to the to the long side and the short side than it is like an outright, I'm going to be long dollars for the rest of the year against all of these FX pairs. I feel like that's just going to be a very, very, very difficult trade because there's so much uncertainty just in the US and kind of
Yeah, yeah. I was
around
gonna. I
policy
mean, the
curve.
Trump administration. I mean, let's face it. It's scary, right? I mean, it's scary for investors when you have, the Trump administration, like them or loathe them, they are very volatile, and the between the comments and policies, I mean, they are truly a wild card. So is that really deterring a lot of investors? And from your point of view, being in your shoes, from what you see, is it really deterring a lot of investments into the dollar?
I mean, from my view, I do think so. And I mean, people are watching that closely, especially on the institutional side, kind of globally. I mean, overall tick data is fine. I mean, for US Treasuries, but I do think that at the institutional level, kind of when we have that uncertainty about government shutdowns or when we have that uncertainty about who's going to become the Fed chair, you are going to start to get a lot of selling because markets just don't know how to digest that. They kind of feel or they felt kind of comfortable with wash. Uh, we saw the dollar start to get bid, but that's again starting to fade. And so I do think that that's really going to come down to what happens and if we have any sort of policy normalcy. Because even as it relates to what's going to happen with differentials, I mean, this implied basis points like you're seeing, 10 or 15 basis points moves and kind of cumulative hikes, especially out to like, December of 2026 and into Q1 of 2027. And so I think that that starts to put pressure kind of on differentials. And so when they believe the Fed's going to be more hawkish with somebody like Warsh, they're going to price those out. Differentials can potentially widen. That's good for the dollar. And then, like we saw yesterday with Jefferson, you've started to have more cuts priced back in relative to where we were sitting. And, I do think that that's obviously going to lead to sell the dollar because if we just kind of go across central banks here, Canada essentially has, 2 basis points of hikes or 2 basis points of cuts, so they're not cutting. The Bank of England has about 25 basis points of cuts. The EU is essentially done. And then
Yeah,
the
yeah.
only
I'm
people,
glad you're bringing this up because I mean, RBA just hiked rates. What other central banks are diverging away from Fed policy right now? I mean, and by the way, sterling looks freaking good against the dollar. I can't really explain that, and nor can anybody else. Maybe you can go there after you're done with your comments about other central banks.
yes, almost finished here. So yeah, the ECB, but 5 basis points and then, like essentially a basis point of hikes. And really the only other large central bank in the G7 that's hiking is the Bank of Japan. And going out to 2026, they believe that we're getting 54 basis points of hikes. So, that would put them about 125. So yeah, I believe that that's really going to kind of be the long-term predictor of what ends up happening with the dollar is do we start to have cuts priced out? Do differentials start to widen that favor the dollar? Dollar gets bid. But if we do have Jefferson come in and he is extremely dovish, even though he's, as I said right now, a centrist, then I do think that the dollar is probably going to be sold. As it relates to the sterling, I do think that that has been interesting because England has not been, from an economic standpoint, doing too well. Um, but overall, I just think that a lot of this is just outright sell the sell the dollar trade. And they're also having a lot of repatriation because these currencies, whether it be the EU or the pound, have strengthened against the dollar. Um, investors who had their money in equities or in dollars, et cetera, are saying, well, we're losing purchasing power, so we'll just bring that money back home. And so I just think that that's been also a function of large amount of inflows into the EU as well as the pound currently that's kind of allowed them to sustain a bid.
All right. Well, that's a great summation of the FX market. So before we wrap things up to here, let me ask you. Maybe I should ask you this just because it's obviously on everybody's mind. We're seeing crypto break down. I mean, we're seeing Bitcoin under pressure. I know it's probably not your space, or maybe you're not your expertise, but do you have any opinions on what's happening with Bitcoin? It trades so bad for a risk, quote unquote, risk asset.
Well, yeah, one of it, I just think that it's volatility, but I mean, I haven't been able to substantiate this, but from what I have heard, is crypto was essentially kind of moving. Let me just pull up a chart here so that people can kind of visualize it. But
Sure.
crypto was essentially kind of moving, to the to it was kind of trading sideways, and then you had that massive kind of rally in gold and silver. And so what I had actually heard is essentially like more or less you're kind of in this range. So what I had heard is people started selling their crypto and piling into precious metals. Um, and I'm not sure if that's true, but essentially, it was just kind of this idea, well, crypto's not going anywhere. We're maybe hard money people, so silver and gold are doing well, so I'm going to sell my Bitcoin, and put it into gold and silver, while they were rallying before we kind of got that sell off. And so, potentially that was kind of the reason behind why, um, you know, crypto markets, specifically Bitcoin, I'm talking more about, has just been melting down over the
And
last few
as
weeks.
melting down, pun intended. And as you're talking to here, which is I find really fascinating, you got Bitcoin just getting slaughtered right now.
Yep.
I say slaughtered; it just moved 2,000 or $1,000. Maybe not so slaughtered, but that's a big percentage from that's over 1%.
Mhm.
And silver is actually hitting new highs as we speak, above $91 again. So it's that divergence that you're seeing between what you're pointing out, even though you have gold, but yeah, silver's at new highs, Bitcoin's at new lows. So the working thesis for the last, decade plus of Bitcoin being digital gold isn't really panning out, is it?
No, I mean it's a risk asset, right? I mean it's hard to look at something that has, well, I mean gold volatility has gone absolutely insane. I think it's at like 70 vol, which is, ludicrous given I think its historic is like 6. But I do think that that's kind of what Bitcoin is. I mean, Bitcoin is essentially just a risk asset, right?
Yeah.
And so, when all of these, the cues start to melt down, Bitcoin's going to follow, or when equities start to melt down just kind of across the board, I think the Bitcoin's going to start to follow. And so, yeah, I mean, I don't see it as a safe haven trade that you would look at in like the gold or silver sense. And, that's something that we've seen. And obviously, central banks have done a lot of buying. There's been a lot of net positioning in gold and silver as well. And so that's helping kind of drive them up overall. And I mean, what right now, silver's up almost 8%. Yeah, I mean, it's going all over the place, but yeah, almost 8%. So, you know, yeah, I just think that that's kind of how it is. And I guess kind of the last point that I would end on is, the Canadian dollar. This is kind of the options matrix, but
You still have the
overall,
Canadian at heart. You're not even living in Canada anymore, are you?
yeah, no, no, I'm not, but I still think that the Canadian dollar is a short once the term structure shows up here. But over the
Ooh.
next year, I mean, if you look at kind of where the term structure is relative to at the money, it starts to widen essentially further out the maturity, and so there's still macroeconomic risk in Canada, and so I do think that USD CAD could potentially push up to 140, and we're been trying to get there over the last couple of days, but we haven't really been able to push over it. But I still think that there's some upside here. And one thing that I have found interesting as well, and I'll end on this, is essentially being long. you could be long CAD, but right now, essentially, we're long the krona, um, which has strengthened, I think, like almost 30 cents relative to the dollar.
Love the krona. They look at. I mean, it's below the dollar Noki is below its 14-year rising trend line now, firmly.
Exactly. And
Yeah.
so what we've liked is long the krona, but then short Norwegian oil companies, right? Because those guys tend to get paid in dollars, right? And
Yeah.
so if the dollar's weakening, essentially that means overall it tends to actually hurt the bottom line. It also tends to hurt free cash flow per share. And so kind of what we've liked is along the krona, short the commodity producers, I guess, because CAD is technically a petrocurrency as well. It would probably, um, you know, follow a similar kind of structure as the krona does. But that I do think is another kind of interesting thing to watch.
Well, to hear, I'm going to say it has been really nice to have you here. If you guys really enjoyed listening to here, make sure if you're watching us on YouTube, hit the thumbs up. If you're watching us on X and you're watching to here, make sure you favorite the live stream. What's the best way for traders to follow your work? I like I said, I really appreciate having you here. You're one of my more favorite people to actually interview because of your depth of knowledge. I love watching or reading your tweets. You always have very in-depth analysis that you put out on X. So is that the best way for people to follow you?
Yes, X, and then obviously Substack as well. The Substack's just longer form. It's entirely free. I always just kind of do this more as like an archive than personally than like outside of my day job
Yeah, no,
than
that's
anything else.
awesome.
So those are kind of the two best places. So
All right. Well, to hear, it's been great. I'm going to be reaching out to you soon and have you back, and we'll reconvene in next month or two and see where the markets stand.
sounds great, Blake. Thank you so much for having me.
Hey, thanks for being here to here. And thanks everybody for tuning in. Remember, tomorrow we're going to be live again on F.A.C.E, and we're going to have Jamie McGeever from Reuters. He'll be joining us probably to talk about how he feels about this administration and some of the tricks they may have up their sleeve with the Fed as well. So you guys have a great day. Thanks everybody for joining in. I will catch you tomorrow, and best of luck today, especially for that ISM.